The big reason I make this YouTube channel is to support entrepreneurs on their business journey. Secondly, I do it so that my team can see what I'm up to, so they know what we're doing in our business. And it's a big team. It's just shy of 600 staff. Some are full-time, some are part-time. It's a lot of staff. And in this month, May, we've spent £380,000 on salaries. And a big chunk of our business is only just open, so some of that's come from furlough. But next month, there'll be no furlough. And so with everything open, we could be hitting £450,000 per month on salaries. By the end of the year, my payroll could be £500,000 a month. That's a big chunk of change. And in this video, I want to talk about payroll controls. Now, there's a couple of ways that you can help me contribute towards my payroll costs. It's by subscribing to the James Sinclair YouTube channel and massaging that like button beneath me. But because the more you massage the like button and the more that you guys subscribe, the more people get to see my videos and the more few cents that YouTube will give me towards helping pay for our payroll costs. Right, let's get into it. I've got this 3 KPI rule in business, which I'm going to tell you about in just a moment. But I want to break down our payroll costs. 270 grand is our nursery business and a big chunk of our leisure sites. 35k is another one of our leisure businesses. 30k is our head office staff. 25k is the Rossi ice cream company that we've just bought. 15k, I don't know what that's Lee Valley Farm, the zoo that we've just bought because they're on a different payroll day. And we've got 5 grand of some other people as well. So £380,000 of total payroll cost this month. That is a lot of money that we've got to make sure that we're bringing in each month to do it. Now, on a normal month, now with Rossi, I suppose we're turning about £1.1 million worth of cash every single month, and I'm hoping to get that to £1.5 million by the end of the year as our 2 day nurseries come back and this new zoo that we've just built. There is pressure, I think, on entrepreneurs and business owners that employ people to make sure the cash always comes in, and that's why I've always worked hard to make sure we've got a big chunk of residual income from our day nursery business, our property rentals and our direct debit memberships. And so I've made another video about residual income coming into your business is the stress buster of business, so that you can make sure that you do meet all your costs. I think that's really important. But I want to talk about now this 3 KPI rule that I've come up with. It's something that I really go into detail in my Entrepreneurs University, which you can try for free at jamessinclair.net, where I teach business owners how to really formulate their business. And here's the 3 KPI rule. Number 1 is you produce a monthly profit and loss. So what most business owners do is they rely on their accountant to tell them how profitable they are. They give them a box of receipts at the end of the year and the account says you've done X, Y and Z. That's a folly to run a business under that situation. You want to produce your own accounts and tell your accountant how profit you are, and then let your accountant work out how to make you the most tax efficient as possible. So producing a monthly profit and loss, or some people call management accounts, gives you a clue on how to manage the business going forward. I am obsessed with management accounts, way more than I care about annual accounts. So management accounts, I like to call them the naked accounts. It's before qualified accountants have got their hands on it, made it tax efficient, R&D and all the other bits and bobs that they do. So you want them naked management accounts. So really important. Number 2 is tracking your average customer value. And we do this religiously. We track it every day. How much people spend on catering with us. Is it £2.50 or is it £4.50? And what's the differences and why is that the difference? Have we not had enough staff, therefore queues, and people didn't want to buy? That's why tracking average customer value can tell you so much about your business. We track it on food, admissions, catering, and we do it in our nurseries. What's the full-time equivalent rate? What's the average customer value of each customer? We do it daily, weekly, monthly and annually. And we're really looking at the detail of this stuff, and we have what we call a daily income sheet in our business that works all this out. So even our supervisors and our deputy managers and our managers are fully aware of what spend per head we're doing, and we're all working to one goal to try and increase that spend per head. Not always looking to just increase turnover, it's about increasing the spend from each existing customer. It's very true that if you can get the existing customer that's already trading with you to spend 5 or 10% more, that's going to be way more profitable than getting a new customer that you've had to use marketing to acquire that customer. And then the third one is what this whole video is about, is understanding the biggest cost in your business walks on 2 legs. That's labor. Labor controls. What is your labor to turnover ratio? That's number 3. So number 1, what's your monthly profit and loss? Number 2, what's your average customer value? And number 3, what is your labor turnover ratio what's your labor ratio compared to your turnover? And we track this every day as well. So like I know at Marsh Farm, we've been running to about 47% labour month to date. Our aim is to be at 25%, and that's not good enough, but we've done loads of prep work and we've done loads of building work. So when you've got your busy days, you've got to catch up. And it's really important that business owners understand this, that your savings on labour are made when you're busiest, but we don't want to compromise service at the same time. It's really a difficult one for me because I literally want to pay people really well. And I work in an industry where that's really difficult to do because it's leisure, it's childcare, and we have these rules. We spend 53% of our childcare income at the moment on labour. 53% is gone. That gives us 47% to pay for the food, pay for the rent, pay for the business rates, pay for the utilities, pay for the marketing. It's really, really difficult. And this is why I think businesses really need to look at making sure you've got strong margins, because the amount of excess in businesses are so high that you've got to make sure that you have a decent margin to pay for all those excess. Now, I'll look at our leisure business culture. Marsh Farm's at 44%, but then they're looking at Rossi right now. We've generated about £65,000 worth of sales in May, and our costs are about, well, actually when I add it on, about £28,000. So we spent like 45% of our turnover on labour. That's just got to be sorted out. Now, we've built up a big load of production and a lot of that stock will get turned into sales eventually, and it should bring it down over the next quarter. But I want to be on 20-25% maximum, and less really for manufacturing, because we're investing in machines, we're investing in CapEx to take out the labour costs so that we can continue to invest into more CapEx and do that stuff. But you can't do both. You can't invest into machinery and invest into labour. That's really, really difficult, and it's a quandary that I'm on all the time. Now, your management accounts will tell you what your month end looks like, but you might not get those results until 10 days after the month. It's really important that you have a system like we use, a daily income sheet that will tell you what your labour spend is on a daily basis in your business, and you compare that to your turnover. £380,000 on labour in 1 month, and sitting here today telling you that it's going to end up going to £500,000, that's a lot of money that I've got to control. I mean, to be a brilliant business, I need to be generating a sort of 1.7 million a month to easily pay for that £500,000 worth of turnover. So you're scared about employing people. That's the other big thing, that so many business owners that talk to me, they listen to this video and go, whoa, this is exactly why I don't want to employ someone. But if you don't employ anyone, then you'll always be a one-man band. You'll be a solopreneur. And you think about business, you go through these 3 stages of business. You go from solopreneur to entrepreneur to what they then call investorpreneur. If you look at my career, I started out as a kids entertainer and I realised I was swapping time for money. Then I started up an entertainment agency. It was that stage I was a small-scale entrepreneur because I'd employed a lady called Jean to be on the phones. I started paying her, then I employed Aaron. We built an agency up. And that was the first time that I'd started leveraging my time so that other people could help me grow a business. The rest, as they say, is history, and you go through the entrepreneurial stage. Then the big stage where it all gets fun is investing and becoming an investorpreneur. And you might think, well, what's investing got to do with payroll? Well, I genuinely do believe this. Despite all I've said about the huge amounts of cost, building a great management team and investing into a team to run a business for you, underlying, if you get it right, it is the best investment you'll ever make. And that's why you see companies that are loss-making but have a brilliant management team, especially financial tech services businesses or software as a service businesses. People pay billions for companies like Facebook that didn't even generate any cash, but they bought into the management team, they bought into the team that were going to make that eventually happen. Going full circle, yes, people cost a lot of money. Yes, my payroll costs a lot of money, but is it an investment? And I think it is, because it's allowed me to grow my business. Let me know in the comments, what do you think? I'll see you in the next video. Make sure you subscribe by clicking here and watch this video, because YouTube tells me you're going to like it. Bye-bye.